Hello, this is Beast McFeast, and today we're going to go over 5 high-yielding dividend stocks. High dividend ETFs are popular. We're going to cut out the middleman and not have you pay any management fees to an ETF today. So Blackstone Minerals, BSM, is based in Texas, and it manages oil and natural gas interests. Pays a quarterly dividend at 6.65%. Share price of $12 to $13. That comes out to about 27 cents a share. It has paid a special dividend once that I've seen in 2021. So there is that possibility. Or OFS Capital. It's a BDC, a business development company, which essentially lends money to middle market businesses. So we're talking, 2 million to 200 million in market cap is their target audience that they're lending money to. It occasionally does acquire minority equity in some of these businesses, and it has consistently paid a quarterly dividend since 2013, though it reduced its dividend in 2020. I kind of like that. If a company is unwilling to reduce its dividend, it can be inflexible, and the shareholders can often suffer in the long term because they don't see consistent growth. Now, even with that reduced dividend, we're still at 8.8% or 28 cents a share. That's received quarterly. It's pretty monstrous, really. That's a very large dividend. It paid a special dividend in 2018, so that's on the table should they have a good year. So I'd keep an eye on this one. ORCC, Owl Rock Capital Corporation. Another BDC, and the first one on the list that I own. The other two are nice. I don't personally have them at the moment. I will keep an eye on them and look for a good entry point. They specialize in providing secured loans to middle market companies with revenue between 50 million and $2.5 billion. So pretty similar to OFS Capital, except for they specify secured loans, meaning that if the company that they give the loan to fails, there's something backing it up, whether it's vehicles that the company has or other properties. They have something to secure their loan for you. I predict that both of these BDCs are going to do better or do well and weather the storm in a high interest rate environment. Because as rates go up, they're going to be writing higher and higher interest rate loans to their customers, which are other small companies. You notice that the quarterly dividend yield is about 8.27%, 31 cents a share, which is pretty great again. Higher than you're going to see in most high-yield ETFs. The first REIT on our list, National Health Investors, NHI. It specializes in senior living and other medical investments. It has paid a dividend since inception in 1991. Pays a 6.15% or 90 cents a share. Share price is a little higher than the previous ones, but that's fine. When you have a REIT, you don't have price to earnings. You have FFO, which is essentially the REIT equivalent. So it's pretty healthy looking, in my opinion. You need to be cautious when you hold a large amount of REITs. Their dividends are not going to be qualified, meaning that they will be taxed at your income tax rate, which makes them maybe better for a IRA or Roth IRA or any other tax-deferred vehicle you have. Zim Integrated Shipping. Shipping industry has been on fire the last year. The whole industry is going pretty nuts with incredibly high dividends and growth. It's really incredible. I would look at Zim more for its growth potential than for its dividend, but its dividend is just monstrous. About 2 weeks ago, it was trading at $90 a share. They released a $17 dividend. As you can see, the shareholders suffered, which is an indication of why maybe high dividend investing has some problems and you need to balance it with typical growth or other fixed income products. So far, they're paying on a yearly, with the dividend being as high as it was and some other interesting things in their dividend history. I'm not sure what rate they plan on going at. I don't think it's going to be monthly, might go to quarterly or semi-annually. If you got into ZIM in 2021 congratulations, you bought in at like $15, and you're looking at getting more than that back in a single dividend, which would be incredible. I think all dividend investors sort of have that dream. So what they do is they own, lease, and operate container ships. So when there was a container ship backlog in 2021 and 2022, these guys were benefiting from it. Their ships didn't have to move, and they were still charging a rate for everybody shipping on them because there was no way to unload the ships. So they came out ahead in that. Shipping and trucking are areas rife for growth at the moment. Finally, we're going to have a bonus pick. This one's similar to ZIM, Golden Ocean, GOGL. I hold this one. I like it. They pay quarterly with, the option to do a special dividend sometimes. Its dividend is, again, very high. They appear to be on track for a 20% yield this year, which is incredible. And I've received a couple of their dividends. When they release a dividend, of course, the stock price drops, but it's been coming right back up, which is really what you want to see out of these high dividend stocks. You don't want to see trend down like has been present in your high dividend ETFs like QYLD and RYLD. I anticipate holding this one for a long time, and I have it set to drip, so I've been acquiring more shares and taking advantage of the compounding interest quarterly. One thing that's interesting about Golden Ocean is it's a very streamlined company. ZIM, they were earning under $200,000 per employee. Golden Ocean is earning about $14 million per employee. So for every hand on deck, they are killing it, which is a pretty interesting metric in my opinion. Another thing I like about Golden Ocean is it hasn't been memeified. ZIM is trending pretty heavily on Wall Street bets at various times, and some of that explains the wild price action you saw in their chart. The Wall Street bets crowd is getting a hold of it and running the price up or dropping the price down pretty aggressively. Golden Ocean isn't as popular. It just simply isn't traded that way. Now, you do have an opportunity of both Golden Ocean and ZIM to play the downside in advance of dividends. It appears that their dividends are so high, the options market isn't pricing them in properly. Out of the money puts on Golden Ocean seem to be priced about right, except for when the dividend releases, there tends to be a drop for a few consecutive days. So I've played to the downside in advance of dividends and come out ahead on 3 separate occasions. Similarly, ZIM, when they released their $17 dividend, I bought some puts, roughly $17 below the price prior to the ex-dividend date, and came out pretty far ahead per contract. It was really remarkable, actually, that it continued to fall for a couple days. I don't think the markets know how to price in such large dividends appropriately. Well, that's it for our high dividend stocks today. Feel free to check out some of these other videos. I think you'll find them interesting. I've got one here on high dividend ETFs, which are pretty popular on YouTube's today. And although I don't think they're right for everybody, I think it's good to know that they exist because they can be a useful tool. Thank you. Bye.